Okay, so let's take a look at just an example. So for the problems here that you will see in this chapter, oftentimes they will tell you a little bit of other information and ask you, for example, the question mark here, or then later ask you what is the cash that the company actually used to purchase the asset, or what is the cash that the company received from selling the asset. So some of the problems here really is just kind of solving this formula here, which you already know in chapter 9. Okay, beginning planned asset plus any new purchases minus depreciation will give you ending planned assets value. This is just the idea of how T account work for assets. Okay, so here's an example that planned assets, you see the left side. The beginning balance is $210,000. That's from last year end. And this, let's say this company did additional purchases, $310,000. That's the new purchases of assets this year. Let's say the depreciation overall of the long-term asset worth $20,000. $20,000 is the part that grown old, depreciation. And it tells you ending balance here is $460,000. By giving you all these information, the question mark there basically is what is the book value worth for this year, the book value of the asset that has been sold out. Okay, beginning plus new purchases minus depreciation and anything sold will give you the ending balance for this year. So if we just solve this equation, it's actually very simple. The part that we sell out, the book value worth $40,000. Again, the beginning balance of long-term assets is $210,000. We made new purchases. Some part of the long-term asset as time goes by grown old. And then some part, the question mark there is the part that we sold out to others, book value of the asset that we sold out. Eventually the balance is $460,000. And if the problem asks you what is the cash that they actually received from selling that question mark asset, you first need to figure out what is the book value of the asset here, and then match